Hey guys, Akil Stokes here. Welcome back to the channel. Today, we're going to break down an awesome trading opportunity on the New Zealand dollar. This is something we've actually been tracking for about a month now, and ever since we broke a key level of structure back on September 25th, well, we've been calling for shorts since, and guess what? They've played out beautifully. But the best part is, well, there's still room for opportunity. In today's video, I'm going to walk you through how we took a massive 200 pip zone, narrowed it down to a precise target using a combination of Fibonacci tools, equal measured moves, psychological levels, and just pure price action analysis. You'll see exactly how we use all of these tools together, not just to make predictions, but to refine those predictions into actionable trading ideas. So this is a great example of why I love technical analysis. It feels like I'm solving a puzzle when everything fits together. Now, before we hop in, this footage comes straight from one of my live trading room sessions where I trade and do analysis both live with a great community of traders 3 times a week. If you ever want to join in and interact with us real time and learn side by side with myself and many other traders out there, as you know, trading is a lonely sport, well, you can do so as part of your 14-day trial membership over at tier1trading.com. All right, let's hop in and start breaking this thing down. So New Zealand dollar. If you've been anywhere around me for the last, what has it been, a month now? Ever since we broke this level. So this was September 25th, so almost a month, right? Short. We've called short since here. And we've gone short. Congratulations. There's still room to go. So there's still more opportunity, right? We had a few different predictions on, right? We started off with a big old zone like that, saying price is likely to come to that zone. And then what we did was we got more specific with that zone. What are some tools that we might have used already, but in this case could use to specify where in that zone that we should look for price to come to? Because this is a pretty big zone, right? It's a zone from about almost 200 pips. What can we use? What tools? There are 3 that I'm thinking of. Fibs. Yep. So we can start with a fib extension from our most recent swing high to swing low right here. And back up, you can see 127 right where we're at right now. 1618, a little bit lower. We can take fib retracement from swing low to swing high right here. You can see 786, which isn't all too important, but it's somewhat important, right near that 618. Someone said equal measured move. So AB equals CD pattern. So the length of this move, drag it on to the length of that move, right? Looking familiar, guys? Equal measure move at the 1618 Fibonacci extension level. And then someone said pump up the volume, and we have volume here, a little bit of a void, but not too much in this area. It spikes up slightly a little bit below here. So volume isn't going to help us too much, right? And remember, we did this. We drew a line on that magic AB equals CD point and 1618 level, and that gave us 55.95. Now, 55.95. Someone? If you're brand new to the live room, I just make noise and you guys type stuff in. Yeah, that's how it goes. Yeah, even handle number, right? We don't want to be at 55.95. Psychological number, 56 even. So 56 even was our ultimate goal. Ta-da! Analysis. We took a big zone of 200 pips and what's the word I'm looking for? We shrunk it down to a very specific price point in which we should look for targets. Technical analysis, right? Amazing. Amazing. This is why you have different tools in your arsenal. What you pretty much just did was I tasked you with a task, with a project, and I gave you a toolkit, and I said, figure out what you need to get this project done. You opened up your toolkit, you brought out your Fibonacci tool, retracement tool, bang, you took out your Fibonacci extension tool, bang, you removed this, you didn't need that, you took out your equal measured move tool, bang. We took out the volume tool. The volume tool didn't really do much for you. Put it back in. You took out your even handle number tool, and bam, we got the solution, right? Analysis. It's a beautiful thing. I love it. This is why I told you guys all the time, right? 75% of my trades are probably pattern trades, but they don't really get me excited. This stuff gets me excited because it actually feels like you did something, right? It's like, you guys ever do like a project around the house? I'm not a handy person at all, but every once in a while I do something, and 80% of the time I make it worse. I am banned from doing stuff. 80% of the time I'm like, honey, I'm going to go fix the roof. And she's like, oh no, please. And then there ends up being a hole in the roof, right? There was no hole there before, but then there's a hole because I make it worse, right? So 90% of the time, that's me. But every once in a while, a handle on a cabinet gets loose. And I rush to the scene with my screwdriver and I screw it back in, and it's no longer loose. And I'm the man. That's what we did right here. I feel good about myself. I feel good about price action trades. Now, as a trader, it's all about profitability. It shouldn't matter whether you feel good or not, but there is a human element to it, right? There is a human element to it. You want to do stuff that you enjoy. You want to do stuff that you like. You should enjoy trading. And that's what keeps it from being boring. So there's a serious lesson behind this, right? Because the more bored we get with trading, we get relaxed, we break our routines, we get lazy. And when you lose that enjoyment, you just don't work as hard, right? Kind of like Gareth Bale when he went to Real Madrid. He was like, yeah, I can probably be the best player in the world, but I don't really. I like golf more. But I'm good at soccer, so I'll keep playing it, right? This is what keeps you involved. When you get energized and pumped and excited about doing this stuff, it keeps you sharp. And that's what I love about my price action trading. It keeps me sharp and it makes me feel good. And that good feeling is the drug that I want to, the feeling, I guess, the drug that fuels me to chase that feeling more and more and more, looking for that next trading high. And it just makes me want to come in every day and just do price action analysis. So it's a positive drug. So anyway, that's the level that we're looking for. Carlos says, why did you take your retracement all the way back from April 9th? Is that April 9th over here? Because that is the last swing low to swing high. So when I look at my price chart here, the last swing low to swing high, right? The move that we're currently retracing from comes from this move. So all of this is a retracement of this move because it is within the swing. It is within the swing low. It is within the swing high. It is the retracement of this move. Yep. It's been a while. It's taken a good old time, but that is the last swing low to swing high that we are retracing from. If you want to take another one, you can. Well, maybe you can't zoom out. I don't really know what's happening here in New Zealand hour. Yeah, that is the last one. I was gonna say maybe there's a lower swing that you can take as well if you want it more of a macro look from like a weekly. But this literally is the last swing low to swing high. So August 22nd to September is not enough. August 22nd. That's here. August 22nd, right? Well, so let's talk about this, and I want to delete some of what I did, but not all of it. All right, so we're looking at taking a Fibonacci retracement from August 22nd, which is right here, to September 17th. Okay, so let's ask this question. What is the Fibonacci retracement telling us? What is it being used for, I should say? In general, what is a Fibonacci retracement being used for? We're looking to measure what? Measure how much a move retraces within a period, correct? So if we're looking at this as being like an initial, like a starting point to an initial structure high, we're looking for it to measure how far we retrace, right? 3D2, 50%, whatever, right? Give me a yes if that makes sense. We're predicting the retracement within this level, all right? So with that being said, right? So if this is the move in which we're using our Fibonacci retracement, once we've done this, what have we done? What did this do right here? Well, we've already violated the lows, right? So we've retraced fully, right? So there no longer can be a retracement because we've already exceeded it. So like, again, if I take my Fibonacci retracement tool from this swing low, and let me know if this makes sense, Carlos, swing high, this low is going to be a 100% retracement. So we've retraced 100% of the move, right? This is the max that we can retrace is a full equal length of the swing low to swing high, a full equal length down. Once we violated that, we've fully retraced. So we can no longer measure a retracement. There's nothing more to measure, right? We could even do it like if I draw my Fibonacci retracement on from here to here, you can see there are no numbers beyond that. So we're no longer looking for a retracement. When you're no longer looking for a retracement and the market violates it, that's when you shift to looking for an extension. So an extension measures the move beyond a certain point. The retracement measures the move within a certain point. You follow me on that? Yeah. And again, think about it, right? Again, if I put my Fibonacci retracement on from this swing low to swing high, there's no more numbers, right? So this is when you would use an extension. And if we obviously see price action. So price action already existed, but this is, if you wanted to predict another way, and I don't mean to take it here because it gets a little bit confusing, but we'll do it anyway. Let's say we're right here. So we're measuring our retracement. I'm going to delete all of this because we don't need it anymore. This has turned into a different level, right? So we're measuring our retracement initially, right? We're saying that, hey, I'm expecting price action to retrace somewhere in this level. Where is it going to go to? Blah, 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 blah. And then we go to our next candle. Boop, and we're like, oh man, crap. It violated it, right? So again, no more numbers. We can't retrace anymore. Hold on real quick. I'm not recording this. Darn it. When my thing shut down, I messed up my backup recording. Hopefully the primary one is working. But so in this case, what you would do, because now the question is no longer where will we retrace to within this zone, right? Because it already didn't happen. What's the next question that we're asking ourselves now? Now that we've violated this low, the next question we're asking ourselves is where will we? Thank you, Ollie. Thank you. Where will we extend to, right? So this is where you can use a Fibonacci extension. Ideally, you'd use it from this level right here. But let's say there was nothing else here. You can actually take that same swing and invert that Fibonacci extension. And now you have predictive levels where it's like, hey, next stopping point could be a 127, could be a 618. Yeah. So there we go. Carl says, yes. Wow, there was a big piece of the puzzle missing. You're welcome. Puzzle piece inserted. And I completely lost my track record of where we were at and what we were talking about. Oh, we're talking about our continuation trade that we've been talking about for the last month. So we know 56 is the goal. You know my method on continuation trades, right? Just wait for fresh breaks until we get to that 56, right? And we've seen that on the lower time frames. We've had a few opportunities already, right? We had our initial move here. We had another one here. We had another one here. This is one we looked at last week. We got another fresh break to start this week. Right here. You guys know my trading style. What am I looking for personally? I'm a pullback trader, so I'm looking for a pullback, right? So again, what I do is I literally draw my line right here, and I look for a pullback. If we can get a reason for entry, look for the next opportunity down, right? That will create a fresh break. If I don't get an opportunity here, I reset it, look for it. Like I just keep doing this until, and I used to be a monster at this in day trading, but you keep looking for this until we get to that destination. Once we get to 56 even, that's when I'm no longer interested because that's when the move has been made, right? That's the prediction point. Once we get there, then it's like, we need to wait for a brand new signal. So there's still opportunities here on Kiwi. If you haven't gotten involved already, you go down to the hourly, you'll see even more opportunities. Again, what you're looking for is price action put in this beautiful, one of my favorite patterns, descending triangles. Love it. I don't know why I said is a bad. Yeah, love it. There we go. We're starting to kind of base off a little bit. You can see a nice double bottom here on your RSI. You can see a nice rounded bottom here on your hourly chart. All right. Let's see if price will come back up to our kill zone, right? Our kill zone is our previous structure low to our outside return right here. And again, you can use the same method of analysis. This, Carlo, if I wanted to predict where price may come to, if it were to retrace back up, what tool could I use? This is where we would use it. Reach into that toolbox, fumble around a little bit. Blowtorch, don't need that, no. Pickaxe, don't need that, no. Flamethrower, maybe not for putting a handle on the cabinet. No, this is where I would use my Fibonacci retracement tool, because what am I looking for? A pullback is another word for a retracement. So if I'm looking for a retracement and I'm scratching my head and I'm asking myself, Akil, if we were to retrace, where may this retracement come to? This is where my Fibonacci retracement tool would come in handy, where I would take it from my swing high right here, my previous outside return, right, to my swing low, which I'm projecting continues as a swing low. And now I can say, hey, I have a 3D2 right here, 50%, 618, whatever your preference of choice is. So that's where we would use that Fibonacci retracement tool. And then again, if I'm looking for, we already have a level of where we would project price to go down to. I deleted it. Sorry. But if I wanted to look for an extension, if I want to project where may price action extend to, sorry, wrong tool. I got the sticky mouse today again, guys. That's where I would use a Fibonacci extension tool from this recent swing high to swing low and then back up. And then I can have some levels. So if I'm not shooting all the way for 50%, if I want to be a little bit more conservative, I may go 127 is always the first stopping point that I would assume, but I may go 127, I may go 618, and then I may go 56 even as the final destination. Love structure trading or price action trading. Any questions about this? We're due for a break.